When you start seeing reporting with language such as challenging, pressured, slipping, or slightly stressed, you should probably, you know what? This video is probably not going to get monetized. Get the fuck out. What's up, everybody? My name is Mark. If you are brand new to my channel, all I ask is that you smash that subscribe button. That's all you gotta do. You click it, and then if you enjoy the video at the end, you click the thumbs up. And if you really want to continue to watch my channel and get notified every single time I drop a video, click that bell button. That way I don't get lost in the algorithm. That's all I ask. All right, today we're going to touch on Ford. Yes, if you own Ford shares and you bought it over $15, I'm sorry to tell you this, but after hours, Ford just dropped over 5%. Actually, it was a little bit over 5%, but then it came back. It's currently sitting at 4.42% as I'm doing this video, which is Monday, September 19th at 9 p.m. It's really late. I don't know why I'm shooting this right now. It's probably going to get lost in the algorithm, but here I am. I'm doing this for y'all. I kind of want to try to be like the first one to drop this video before tomorrow morning when the session opens up. But basically, Ford is doing what all these other companies have been doing, like FedEx did ahead of earnings, and kind of giving investors heads up. Ford has earnings in October 25th, 2022, and it's not looking very good. Like it's like at all. And the crazy part is that Ford has been doing pretty good over the last two earnings. Q1, it beat both EPS and revenue. Q2, it beat both EPS and revenue, and it was looking really good, especially with the Ford Lightning coming out, which is supposed to be its electric vehicle that's going to change the game for trucking companies. So we'll see what happens. By the way, I was really excited about buying the Ford Lightning because they were supposed to start off at $35,000. And of course, they reneged, and now they increased it by $10,000 because, you know, all the tax breaks that Biden's giving. He's giving you a $7,500 tax break if you buy EV vehicles. So Ford decided, you know what, we're just going to raise our prices by $10,000. It's really fucked up. But this is how America operates, and therefore you, the consumer, get screwed.
It takes an advanced sense of humor. I don't expect everybody to understand.
But let's talk about what's happening with Ford here. So Ford decided to kind of give like a preliminary update on what to expect for the earnings, and it's not looking good. It's the same thing that FedEx did, and we saw what happened with FedEx. I mean, literally dropped over 20%. So Ford right now is only down 4.4%. I don't know what's going to happen tomorrow and Tuesday, but I'm pretty sure it's probably going to start dropping even further. So it sucks for everyone who bought at $15 because I honestly believe it's going to go close down to $10. But I'm going to pull up the charts here at the end before I end this video. But quickly, this is what's is being announced right now. They're saying that the car makers sees a $1 billion added into supply costs for this quarter, which is insane. As you know, inflation is skyrocketing left and right. So of course, the cost of making a vehicle is going up left and right. So with that being said, they're seeing that there could potentially be shortages that could result in 45,000 vehicles only being partially built. Like Tesla, like a lot of these vehicles out there, they have all these cars just sitting in the parking lot waiting for chips or waiting for some parts to actually put the cars out there to get released so they can start selling, but it's not happening. And now we have even more supply chain issues, and it's looking very gloomy for Ford. So this is what Ford stated. It said, inflation is pushing suppliers' costs to $1 billion higher than expected in the current quarter, joining the choir of the major corporations warning about macro challenges ripping through their economy. The automaker expects an adjusted earnings before interest and taxes to EBITDA at $1.4 billion to $1.7 billion. Let me just be very clear. That sounds like a lot of money, but understand this. Preliminary estimates was supposed to be around $3.7 billion in adjusted EBITDA. But, you know, Ford last year, I think, reported $3 billion that it earned the year before that. So imagine that. That is literally close to almost half of what they were expecting. So shortages of these key parts will also keep its inventory of half completed. And according to the statement on Monday, Ford is expecting things to not look very well moving forward for the next couple of quarters. Like many companies out there, June was pretty much the low for the year. I don't believe that this is the bottom yet, but Ford was around $10.61 for the 52-week low, and it went all the way up to $25.87 before it started selling off. Once again, getting really close to that $10 level before it started bouncing back up after June. Literally, looking at the charts right now, it looks like back in June, Ford was around $11.25 before really kind of going back up to $15, close to $16. Actually went above $16 on August 16th, and then it's been selling off since. But today, as I mentioned, it is now currently after hours at $14.27. I could see Ford literally going back down to the $10 range. Yeah, I would even say as far as $9.33. Now, again, I'm not a financial advisor. I'm just looking at the charts here. It really has a key level around the $11.31. But if it doesn't hold there, it's most likely going to fall down to the $9 range. Like I said, this is bad news. And looking forward, things looking really grim right now for the short-term period. Long-term, I'm sure Ford will probably do perfectly well, especially once they start releasing all the EV vehicles and revamp their business and start putting more E-Mach-As, the Mustang, the E-Machs, when you start releasing more of those, which, by the way, it's a hideous car. I don't even know why you would even call it Mustang, because it looks nothing like a Mustang. But looking in the future, I believe Ford will be just fine, especially with the government backing and all the tax credits and blah, blah, blah. But short term, I would definitely short Ford. Again, I'm not a financial advisor. I'm not here to tell you what to do, but just me personally, I could see this stock going right back down to $9, which then I will be a buyer. I tell you this, I will 100% be a buyer in a $9 range, and I will even do cover calls on Ford, because Ford is a pretty good company overall as a blue chip stock, and it's a nice company to have 100 shares of, and then just do cover calls on it until things kind of swing back to the upside. But in the meantime, if you want to talk about short term, yes, I would short the shit out of Ford right now. Long term, I would definitely buy at a decent price range, starting probably around $10. I would start scaling in and, probably load the boat somewhere around, $4 if that actually happens. If that really happens, I don't know. I mean, that's really extreme. Honestly, $9 is probably where I think it's going to go. If the S&P 500 ends up dropping though down to 3,400, yeah, Ford is probably going to go back to $4 or so. That's pretty much it, everyone. I'm trying to get used to doing short form content, because my stuff is always so fucking long. So I'm trying to do it short and get straight to the point. And I just want to cover what was going on with Ford. So keep an eye on it. I'm very curious to see what happens Tuesday once the market opens. Will people sell off? I don't know. But I know my coworker literally just bought shares in Ford last week. And I was like, I remember sitting over his shoulder. I was like, I don't think it's a good idea, man. You should probably wait until it drops a little bit lower. And he was like, I'm okay with scaling in. So much for that one. Until next time, y'all. My name is Mark. Peace out.